So, if you pay attention to some of the housing narrative in today's news media, a lot of people are saying that, hey, we've already bottomed out in the housing market, that the crash has already happened, it's only going to get better from here on out. Well, I don't think that's the case when you consider what just happened in January with respect to the existing home sales reported by National Association of Realtors. We'll talk about that and more. So, welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is February the 22nd. Hope you're doing well. Randy Patrick here, putting the realism back in real estate. This video is brought to you by our friends at Foreclosure.com. You know the drill. You want to find distressed properties, go to gethousingdata.com. That's gethousingdata.com. Check out what's going on in your own backyard and neighborhood, all right? So here is interesting information here. So U.S. existing home sales unexpectedly declined in January with a record 37% year-over-year collapse. Well, we'll get into that right now, and we'll talk about what NAR has to say here. But the whole point that it's 11 straight months of sales declines, and the whole thought process is, well, we're supposed to see a rebound in January. Well, it didn't happen, and then they basically revised December's decline, and it was actually worse than it really was. So, you know, the housing market isn't doing well. It's part of the cycle, part of the change, and I think people just have to stop, praying that it's going to go the other way, because it's not. All right. How do we know that? Well, guess what? Here basically is your existing home sales. So this is the seasonally annual adjustable rate, the SAR. You can see that the January's volume of transactions equates to about 4 million sales extrapolated over the year. That is actually worse than the sales number extrapolation that was during the pandemic. So believe it or not, we're performing worse than a couple years ago, which is very interesting. So median price for existing home sales, guess what? It's dropping. It is sliding down. $359 was the median price. Take a look at what else going on here. So the median home sales price percent year-over-year change. So yes, there still was a year-over-year change in median home price value, albeit a 1.3% change year over year. So ultimately, what we're seeing is a sliding scale on price points increasing. They are increasing at a much more reduced rate, 1.3%. If we keep pace at where we're at, we're probably going to be flat in February, and we'll probably start going negative in the next upcoming months, basically. Obviously, the existing home sales percent year-over-year change is almost 37%, 36.9%, which basically means people aren't buying homes. They're not buying homes for a variety of reasons. They're not buying homes because mortgage rates are too high. They're not buying homes because the economy is too poor and everything else costs way too much money, and we're entering into a recession. Even though, again, I'm not an economist, but we all can look at the information out there and we see that there's so many signs that a recession's coming. It's just being pushed off, or it's not quite there yet, depending on who you speak with, etc. Anyway, economy bad, people don't buy houses because money is going to other things like utilities, food, gas, whatever. But again, this is the worst worst year-over-year sales decrease in a long time, for sure. Realtor Confidence Index survey, first-time home buyers were up, real estate investor sales down, which is interesting because, again, and I said in my previous video, investors are pulling back. Yeah, investors are not going to be buying at inflated prices with high interest rates because investors aren't looking to acquire to live in the property. They acquire to cash flow or fix and flip and make a profit. So clearly, if the numbers don't make sense, they're going to pull back, which you can see they're doing. Cash sales are still up, which is interesting. Distressed sales, which I think is the most important thing here, is that 1% of the whole entire market across the country is made up of distressed sales, which that's nothing. And there's a whole bunch of them waiting to sort of hit at any time in the future. Days on market, we've increased from 19 days on market to 33 days. So that's increasing, which means there's more choice and buyers are becoming a little more picky with respect to how they're going about the marketplace. Obviously, we can see the percent and change in sales for different price ranges. Obviously, the million plus home price range lost 41% sales volume from the previous year. So basically everything is 25% or greater in all the segments, but you can see that, we're getting to the higher price points. They're getting hurt a bit more. Same thing. Why pay high price and high interest rates? Wait till the market changes and see if we can pick something up then. That's the way people think these days. And folks, if you enjoy the information I provide, if you could smash that subscribe button, I'd really appreciate that. And if you are a subscriber, please resubscribe, because magically I lose subscribers every day, every week. All right, thank you very much. I appreciate you guys watching my videos. All right, interesting enough here. Well, where are we at with respect to volume? So real estate volume, and again, this is going back to NAR, National Association of Realtors, and they put this report out, their existing home sales report, every month. So it's January 2023. All right. So the homes that are available for sale, that are on market, typically listed in the MLS, are, I guess you could say, statistically calculated based on a time frame. So according to NAR, there's 3.4, I guess you could say, months supply of existing single family homes across the board. So what does that mean? That means if no new listings came on today, it would take roughly 3.4 months at today's current sales pace for those listings to get to zero. In other words, for all the homes that are being actively trying to be sold to be sold. So 3.4 months. So it's not really increasing. It's kind of plateauing, as we can see. We've been 3 since October, and we're 3.4, 3.5 in January, etc. in December. But so what does that mean? It means, either we're selling as much as we're putting on, or people aren't putting on their property for sale because they figured, hey, maybe I'll refi. Oh, can't do that anymore. Who knows, right? Maybe people are waiting for a market change. So what you don't want to have if you've listed your home, and I'm sure most real estate agents will tell their clients this, is you don't want to have what we would call a long day on market. So if the home has been on market for 15, 20, 25, 30 days, it's not too bad. If the home's been on market for 90, 120, 150, 180 days, then clearly nobody wants it, there's something wrong with it, or the price point's incorrect, you see? So basically, you don't really see people listing during the holiday months, November, December. They might relist or start listing in January. So I would suspect we'll see probably an increase in supply coming on soon. But again, it's all based on the marketplace. If there's no buyers, or buyers are being picky, why do you want to put your home on and compete? You know what I mean? Who knows? So I'm going to go back to this slide I showed first off here. It's the record 12 straight monthly decline. Okay, December's 1.5% decline was even worse, to 2.2% month over month. So really interesting. Basically, January sales tumbled. It was expected to increase, and it didn't increase, nowhere near the expectation. We can see that on the chart here. Interesting enough, what else goes on? Well, if the unexpected decline smashed sales records year over year, as I said, dragging the existing home sales SAR at its weakest since October 2010. So this is a little bit weaker than what we had a couple years ago, and we're basically sort of at the 2010 time frame where things were really at its absolute worst. Where that 2010 was the 2000, I guess you could say, 8 or so. 7, 8 was the start of the crash. Basically, it's our lowest point one of our lowest points in that time frame. So our sales volume activity is reminiscent, just like it was back in the previous housing crash and crisis, which I think is quite interesting. And as well, if you take a look at what they're saying, this is worse than the very lows of the COVID lockdown crisis. I agree. Home sales are bottoming out, said Lawrence Yun, who's the NAR chief economist. Inventory remains low, but buyers are beginning to have better negotiating power. So exactly, if you're paying higher interest rates, you're not going to overpay for a property. There's no way you're going to do that. Properties remained on the market for 33 days on average at the start of the year, up from 19 from a year earlier, which I mentioned. Homes sitting in the market for more than 60 days can be purchased for around 10% less than the original list price. Interesting, right? That's helping put downward pressure on homes. So as the longer it sits, the seller and the real estate agent has to decide, well, if I'm not attracting buyers, what do we need to do to attract buyers? Well, two things, right? You offer increased commissions to real estate agents or bonuses to real estate agents to bring buyers at your list price, or you reduce price to attract a larger pool of buyers. So after 60 days, it looks like the buyers are dropping at about 10%. So if you think about that, if the median price of a home is $359 and we're seeing stuff being dropped, the 10% is not immaterial. It's not a couple points. We're looking at about 10%. And that's real hard cash. So if I'm listing a home for $350, after 60 days, I'm dropping $35,000 on average. So that's not too bad with respect to what's happening in the marketplace, and that could even increase as time goes on. So downward pressure on home prices is going to start to happen. The median selling price was up 1.3% from a year earlier. That's the smallest annual gain since January 2012. Okay, so January 2012, we were coming out of, that was the kind of what I would call trough area, right? Peaking was 2006, trough was in 2012, so things just started to increase a little bit as time went on. 2012, 13, 14, 15, all the way up to where we are, to 2020. We saw a pretty quick increase in housing values. So this is the smallest increase compared to 2012, when we were just coming out of the trough of the real estate cycle, previous real estate cycle. So very interesting to see how this is kind of playing out. And but what does this all mean? Well, it means things are pulling back, and and how can I put it? I guess you see so many conflicting opinions on the real estate market, and that's where it was. That's the way it always is. People. I read some of the comments people put on my videos, and I mean, I've been saying this for 2000, since 2018. Yeah, and we have a manipulated and controlled market. It's actually happening now. We're actually starting to bottom out, and things are going to change. And we're not even at the start of it, guys. Simple as that. What happens? Well, retail buyers are getting hurt, or they're not wanting to purchase. Big investors, as I mentioned last video, they're pulling back because they're not going to buy at the current price points. However, you've got investors here who are also saying that we are entering the best real estate market opportunity since 2008. So what happened back in the last housing crisis? Well, retail people got basically decimated. Lenders got decimated, but people who had money or had special financing, the larger investors, etc., they swooped in and bought a lot of property at very reduced price points. So what we're seeing now is the start of the opportunity coming up in the near future. Whether you're an investor or wanting to be a primary home purchaser, if you just hang on a bit longer, you're going to have more choice and price points will drop. But as I say, we're always going to have that faction that says, no, we've bottomed out. It's only going to get better. Don't worry about it. We're not going to crash. Well, really, nobody has the proverbial crystal ball, right? We have to go on what's happening historically. We have to go what's happening in today's marketplace. We have to take a look at what the experts are saying. There's way more people commenting on this than they were back in the last housing crisis. Okay, it's amazing how many. And again, I don't watch other videos, but I can see the thumbnails on YouTube. And everybody, a couple years ago, no one was talking crash, right? No one talking crash. Now every other video is crash, markets falling, the whole bit. So getting on, and you guys realize that I'm, kind of shadow banned here on this medium, right? So anyway, so I've been talking about this for quite some time. And, it does happen, just may not happen as quick as we would like. And there's more forces that are out there that are trying to prevent it or manipulate the market. So the key, though, is if you see the signs and know how to run through the market the way it is today, and you find the deals and you work a little harder, you'll have some success in the real estate field. Simple as that, guys. Anyway, I'm not going to get into what's going on. I've talked about this constantly. If you want information about how you can participate in this market to buy yourself a cheaper primary home or become a real estate investor or increase your investing opportunities, because virtually nobody does some of the stuff that I do. Very little happens in every market across the country with respect to short sales and things like that. You need to reach out to me, okay? I've got opportunities for everybody, a lot of stuff going on here. So by the way, if you want to get a hold of me, hit me up with an email, send me your contact information. We'll make sure we get on a call, have a chat. So once again, thank you for the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. And the best or worst is still yet to come. Let's be prepared and get ready for it. Take care, guys. We'll talk to you soon.